This is going to sound unreal, but we raised $30 million in 90 minutes because they had set up the entire platform of what needed to happen. So the foundation was there.
Wait, what foundation was set? What prerequisites were there for this 30 million raised in 90 minutes?
Relationships are everything in this business. You know that. And when you have enough people that are within the ecosystem that are looking for opportunity and hitting that saturation point where we have a ton of private debt, how do we neutralize that risk and switch over? So we had a couple hundred investors that were a part of that and did a lot of preparation.
Nobody's born incredible. People who do incredible things simply took the right steps. This is our journey. This is the hunt for incredible.
Hello, and welcome back to the Hunt for Incredible. So today is a fun episode. We've got my man, Reilly Brennan. Reilly has built, with a family office, built a portfolio from $3 million to $330 million in real estate assets. So we're going to dive into the strategies and what working with a family office looks like and how you actually think about navigating and scaling a portfolio right like that. He's currently working on his second multi-million-dollar portfolio and scaling that with incredible acceleration. He's been in real estate for about a decade. He was in the Marine Corps for 8 years. And he also does stand-up comedy on the side. We were talking a little bit before the show. Reilly, I haven't told you, but one of my bucket list items is to do just like one, I don't even know what you'd call it, like stand-up comedy thing, because I am constantly looking for things that make me uncomfortable. And there's actually nothing that makes me, there's nothing to me that sounds more uncomfortable than standing on a stage and intentionally trying to make people laugh for 20 minutes or however long it takes. So
yeah,
I'm super stoked to dive in. Reilly, thanks for being on the show.
Absolutely. Thanks for having me, brother. I'm happy to be here.
Yeah, so just diving straight into it, tell me about what that journey, and you can even just give me the highlights, then we can dive deeper, of scaling from $3 million to $320 million. So that's incredibly aggressive. Over what period of time was that?
3 years.
3 years. So within 3 years,
yeah,
acquired over
quick.
$317 million worth of real estate. What strategies did you employ to actually acquire that much?
So I got to give a lot of credit to my mentors, Nick and Elaine Stockerberg. Like, this was their brainchild, and it was really a privilege to watch the determination that they have and their ability to build teams and scale them. And like the quick 30-second version of how this happened was, initially they started within property management and, kind of working with friends, families, working at that 10% commission for all of your leasing fees, essentially. And they started buying real estate and then quickly pivoted into master promissory notes from investors, and starting small, like, 10, 25, maybe 50,000, maybe a couple $100,000 notes that would allow us to leverage and go buy single family homes. So we scaled that. COVID started happening. We reeled back on a couple of things, but then realized, holy smokes, the debt is super cheap right now. We need to pour the gas on and borrow and buy as much as possible and ride that appreciation wave. And when we finally felt like we hit a really good point with the total assets under management on the single family portfolio, we actually took over, I won't say it was failing, but it was a more challenging small apartment complex. And the goal was to see, can this company manage an apartment complex? If yes, then we should start buying apartment complexes. So we did. We started scaling a couple of apartment complexes. We bought a 30-unit townhome development. I think that was just over $8 million. And then we realized, like, oh yeah, we can start building from here. So I worked on the growth side, leading the leasing team and working on acquisitions. And from that point, we skipped the syndication ladder and just went straight into PE, private equity. And Elaine is a physician, and they had a lot of clarity about being able to say, you know what, high net income individuals need a way to start offsetting their taxes. So that was a lot of the pool we were fishing in for these investors. There was a ton of marketing, a lot of conversations, getting to know these people personally and understanding what their goals are. And the first capital raise that we did was, like, this is going to sound unreal, but we raised $30 million in like 90 minutes because they had set up the entire platform of what needed to happen. So the foundation was there. Go ahead.
Wait. So actually, no, continue, dive in. Like what foundation was set? What prerequisites were there for this 30 million raise in 90 minutes?
Yeah. So it came down to just like relationships are everything in this business. You know that. And so when you have enough people that are within the ecosystem that are looking for opportunity, and then probably hitting that saturation point where, like, all right, we have a ton of private debt. How do we neutralize that risk and switch over? So we had, I don't know, maybe a couple hundred investors that were a part of that and did a lot of preparation. There are people behind the scenes during this call that are producing the entire segment for things, staying in the chat, staying active, keeping people hyped up. And I think we were really fortunate with the timing that we decided to, pour gas on this fire during COVID, because people were nervous, and there was so much confidence with this company that it was hard to say no to the opportunity and to be able to see the operators. And that's another thing I really credit them with, is they wanted to get the team in as front of as many of their investors as possible to say, it's not just us. You should see all the layers. You should see the people. You should see the confidence and the competence and the enthusiasm that this team brings. And then it was off to the races. And we were buying all sorts of apartment complexes. Eventually, they pivoted.
I need to not to cut you off, but I can't. There's so many nuggets of gold I got to dive into. So, what made the opportunity so good for the investors? And were those relationships already there? Was it like there was a marketing effort targeted towards physicians investing in real estate? Like, what led up to being able to hop on I assume it was a Zoom call or whatever the mechanism was for engaging with investors at scale like that?
Well, I think one of the advantages that we had is we were, located in Rochester, Minnesota, which is the home of the Mayo Clinic, right? That's the flagship operation. So you have all these individuals based out of there. And it's like, if you say that you're a Mayo physician, like, there is a lot of clout that comes along with that. And so being able to take that position and say, hey, let's talk with all these other high net income professionals that work in healthcare and show them the path forward. And the interesting thing that always stuck with me about how we raise capital is it wasn't necessarily like, these are just the returns and, we have a good product and this looks really juicy on paper. But it was more from that relationship standpoint of, let's make up a person, hey, Dr. Tim, I know that this is part of your plan to pay for your kids' college fund. And I understand that. And I know how much that means to you. And we're not going to let you down. And really tried to personalize, like, what are these funds going to be used for? Because, like, getting rich is not, creating wealth, can be very static and sterile from a lot of outside people. So I think putting the humanity back into it as well and having an understanding of, like, what are these people's real needs? Yes, they want to make money, but what's the need behind the want, and being able to explore that. So that was the foundation and really the model and the language of how we spoke to investors to bring them on board and say, hey, take a look at what we're doing. We had created as a team an event where we flew investors out. They got to walk through the properties. A big bus was rented. Our operations team did a fantastic job of coordinating all these logistics. So you'd have some classroom and academic time with Nick and Elaine teaching. And then ultimately, you're able to take that and say, okay, now let's go walk all these properties where your capital has been placed. Let's get you inside these properties. Let's allow you to ask these questions. Let's look at what these rent rolls are and just have a ton of transparency with everybody. And I think, holistically, that means a lot to people when they can see what they're buying and they can get excited about it and say, oh yeah, that building that's got, 6,000 square feet of beautiful, like, 1940s terrazzo marble floor, that's part of mine. So it becomes exciting for people to participate, and they want to keep moving forward and get into the next one too.
So then Nick and Elaine, I guess they're physicians at the Mayo Clinic, and so they were having these conversations with other physicians who were there.
Yep, that's where it started. Elaine is an MD physician, and then Nick is actually an engineer by trade and had a whole career in tech beforehand with Dell, and then built multiple engineering teams for the clinic to rebuild entire systems for them. So, Like it was this beautiful relationship between the two of them and what their competencies are for building systems. But both of them were just so much better about being able to build people and train people. And I was just really fortunate to be a part of that ride up and be able to witness like all the things that they did. Because never in 100 years would I've been able to expand my mindset unless I had that proximity to them.
Dude, that's amazing. Okay, so they rallied the troops, got everybody together. They did really in-depth relationship building and showcasing the properties and creating a story and an outcome that people are looking for, not just saying, look, these are the numbers, but saying this is what your future could look like by being a part of this. So y'all raised a bunch of money. And then what did deploying it look like? Because you were on the acquisition side. So you had all this capital. What were some of your metrics of what you were looking for considering the landscape?
Yeah. So originally, I think if like you want to talk about specific returns, like we're, constantly, but before things got a lot tighter in the market, we're looking for, well, what's going to provide us with more than a 10% cash on cash return? And where is the value add? So that was probably the biggest action item that we would find is, okay, we can buy this and we can stabilize it. And those were some of the acquisitions that came on later. But a lot of it was, okay, this is a building. It's in a great location. We can renovate for this cost. And then we can get ourselves to a cash out refi within, 2 years of quality financials, redeploy that capital and continue to grow. Because it's simple, it's not easy, but the bar for property management is so low nationally that if you're just a little bit better, people pay attention. And there's a lot of intentionality between the branding and between the marketing. And a lot of the goal is really like, we want to be the best in everything that we do, like not only for our investors, but to be tenant facing as well. Right? Because the investors are only a small piece of the equation. Second to that is, do we have a team that can execute and be, high quality stewards of this capital that's placed with us? And then third to that, do we have an amazing team that can fill these buildings at premium rental rates? And after these renovations, are the people there, are they happy? Can we get them on multi-year leases? Can we build in escalation to the leases naturally? And all of those things really came together in this super harmonious way that allowed us to achieve this great scale. And along with that, it's continuing to hire the right people. When we were beginning to grow our leasing team, a lot of what I really liked to do was find people who had zero property management experience. So one of my favorite hires was actually an individual who came out of restaurants. And that was kind of a light bulb moment of, well, yeah, of course, servers in restaurants are going to be excellent leasing agents.
Right.
They know how to talk with a guest, with a customer. They are, solution oriented. They know how to solve problems. And like at a root foundation that you need to have in that industry is like, you just need to know how to get shit on a little bit and how to pivot and take a negative experience and make that positive for them. So they feel like their needs are being met and that I guess their belly is full and they're happy at the end of the meal. Like,
Yeah.
how do we just capture that same emotion when you're placing somebody into a home?
Yeah, that is such a major point to highlight because I experienced the same thing getting into real estate from tech because tech is so fast paced. And then also the subsector of tech that I specialize in is in startups and growth startups. So like everything is super aggressive, fast paced, rapid iterations to understand what's working, what's not working. And two of my partners on the hotel that we bought last year, two of my partners have a background in tech, and one of them has a background in consulting and private equity. And so we were ripping through different strategies on how do we increase the deal flow? How do we raise capital? And we were approaching it much more like a tech startup than like a traditional real estate group. And I feel like that enabled us to increase our velocity so much quicker just because the way we organized ourselves as a team and had agility and pivoted, it translated so well that I spend a lot of time thinking about, as I'm like, the way that I look at it is if I'm trying to do something that I've never done before, I need somebody on my team who has expertise on that, like someone who has succeeded at that thing that I'm trying to do. But then I also want to bring somebody on who has a skill set from a totally separate sector that is applied really well in an innovative way to whatever it is that I'm working on. And I found that that tends to be the
Right.
best combination of the old and the new to create an environment where you do have this older knowledge to make sure that you're staying the course, but then also having new flavors of innovation, let's say, that enable us to move faster or think about things in a different way.
Right. And I think that's the worst thing that an investor can do, from starting up to even, continuing to grow a portfolio, is surrounding yourself with individuals who are just like you, and not necessarily, just like you personality, but from a skill set. Very much a team leader, kind of a bull in a china shop. I'm happy to go fast and break things, and like, nope, like, if it's 85% done, just get it out. We'll get to the failure. We'll figure out what the other 15% are. I know I'm not an operations guy. And so I have been intentional about trying to surround myself now during the second portfolio build of who's got more detail, who likes to look at the books every month and manage the accounting. And so I think when you're able to build a team around, where your blind spots are, it's better for everybody. And people are enthusiastic to feel like you want me here because of this skill set. So it's building more of that trust factor and, that safety net as you continue to grow. And one of the things that I've kind of realized right now, and I use a metaphor with the lake because we have these giant, tankers that are up here on the lake, these ships. If you don't create anchors or a way to slow yourself down, or people to say like, okay, this is good, but let's also consider this, you're going to crash into the shore. So I'm trying to find more anchors for myself because we are growing so quick where people can say, that's a good idea. Also, let's reel back just for a moment and like, can we evaluate these three other things? And there have been a lot of good lessons that have come out of that as well.
Yeah, that makes a lot of sense. What was your buy box as you were scaling? Like, were there different investment criteria? Like you mentioned that you were doing loans as well as like actual acquisitions. Did you pivot from loans to acquisitions, or did you have like these multiple buckets that you were investing in to manage the risk profile?
So a lot of it was, kind of carried on the back that there was a $5 billion infrastructure package that was going into Rochester, which is a town of only 120,000 people. And so being careful and intentional about where we're purchasing, right? Like location applies to every real estate deal, period, ever, period. So having the clarity to say what's within the path of progress here, particularly with the DMC, the Destination Medical Center. So we started buying properties up that were going to be in close proximity to both of the hospital systems where we were around. And second to that is what's an underperforming property right now. And again, back to that bar being really low, a lot of people just don't care about an asset if they don't own it. And so you see a lot of poor operators, and then eventually the owners say, I'm kind of tired of this. Am I able to exit and make a little bit right now? This has become a headache. It hasn't gone as well as we wanted it to. And then we would apply the operations that we've built as a company and just see phenomenal success from that point there. I don't think they, I've been separated from the company for a little while now. So I think that they're still actively procuring in that area, but also realizing, okay, we need to start branching out. If we've hit too much saturation, where can we find other markets where we're going to have a lot more stability now too? So we're not, kind of the only show in town. And that was a way to pivot and try to spread part of that risk too.
Okay. So you started hyper localized in Rochester and started acquiring there.
Mm-hmm.
And then as you began looking at other markets, what other markets did you start looking into?
So I know that I didn't have involvement with it, but they started acquiring and working with a partner who had a ton of construction and property management expertise out in the Washington area. And then branching up around like the Minneapolis and the St. Paul area too.
Gotcha. Okay. So it sounds like there was a big jump from 0 to 1 of acquiring properties and managing them in-house. And of course, like the more of that vertical you own, the greater the profit margin. So that's probably what
Yep.
What return profile were they able to provide to investors?
So the split became like a 50-50 equity split after everybody got paid off.
Nice.
I don't believe that there was any sort of pref that was there whatsoever. Again, going back to if you're working with people and they're comfortable and they want to be involved in a project that they're excited about, that made it more of a, I hate to use the word sell, but it was an easier easier position to float somebody. Again, we'd look at things and say, we probably want to see anything that's above north of a 20 to 25% internalized rate of return. And how quickly are we getting back to be able to pay those investors and get to the equity split? Because returning capital quickly keeps people enthusiastic about wanting to continue down that path with you.
Right. Yeah. Yeah, that makes sense. So then jumping straight into property management and acquisition together, did Nick and Elaine have a real estate experience and that's what they formed the team around, or did they bring you or other people on to help build that team? Like, how did they go from that 0 to 1 to form that whole team such that they had a high caliber team right out the gate that they could raise capital and then work with to deploy?
Yeah, that's a great question. So going back to like the history of how the team was built, I was kind of one of the first individuals that was in the door. I just had blindly reached out on Bigger Pockets when my wife and I moved over to Rochester to say, hey, I'm interested in investing. I want to keep on this path. Met with Nick, and he's like, hey, if you ever just want to like stop by and do work for us, you're welcome to. And eventually, I'd worked in HR and had done hiring before. And I think that was one of the better decisions as you're starting to scale a company is, okay, I certainly am able to, if I'm an owner, I can hire a ton of people. But if I can get somebody else in here who also has the ability to hire personnel, I think that was a really great decision that was made. So we kind of built out like who can lease, who can hire. Let's get a couple of people in here. Then we hired who eventually would become our operations director. Again, like just a very heads down, detailed individual who notices all these nooks and crannies, and then can also help build a lot of the systems out because those were muscles that I didn't have, right? So we needed a different opportunity, a different individual in that right seat, right person. And as soon as we continue to grow, it's like, okay, we've got the revenue now. Let's continue to get, lead with revenue at all times. Let's get another leasing agent in here. Let's get that filled. Then we started realizing we had pretty inexpensive labor starting out during the first 2 years, I would say, where we were using 1099s to do a lot of the renovations and the maintenance. And then finally hit the point where, okay, it now makes sense for us to have in-house W-2s that are running the maintenance, that are doing the lawn care, that are doing snow removal, that are checking on the properties monthly. And everything really just kind of came together. It was like a convergence of like all these little creeks that decided to form one big river. And then eventually that water capacity, right? You just have so much density that's there. It's really hard to slow down once you have an incredible team that's behind you and you have the motivation to continue to look for properties.
Yeah. And also you have so much more. Well, first of all, your margins get significantly fatter, which gives you much more room for error. But then on top of that, it enables you to do things like what you're saying, that 50-50 split, which is insane. I was talking to a buddy of mine 2 weeks ago, and the way that he structured his portfolio, so he's in self-storage and has $200 million worth of real estate right now. He's 30 years old. They do $20 million builds at a time. And they own so much of the vertical that they're able to give their investors significantly higher margins than somebody else who's just building or just leasing or something else. Because basically, like, they own the construction crews, they own the equipment that gets rented out to the construction crews. Any subcontractors that are not part of their crew, they require that those subcontractors rent out from their rental companies. So renting like water trucks, renting those temporary office spaces for the GC and contractors and stuff like that. So like they own so much of the vertical that they're profiting from each one of those layers. So if they make a mistake in any of those layers, like let's say permitting takes longer, so they're delayed, they have much more buffer because they're generating revenue from so many different directions that if they're short on revenue in one area, then they're still covered. So being able to quickly build out that vertical, it adds such a safety net. And then that's only like the downside that gets hedged. The upside ends up being significantly greater as well.
Absolutely. Yeah. And it's certainly not without challenges when you're building all these different teams and you have new personalities and it takes some finesse. But one of the mantras, that we had, there were a couple of them, but one, will it make the boat go faster? Each decision. And the second one is, if we can't identify one thing where like, how do we make a 10% improvement here? It's like, okay, well, how can we find 10 separate things where we can make a 1% improvement? Because that aggregate will still get us to that 10% that we want to see on a bottom line from like an NOI perspective or from a gross revenue, and trying to find micro efficiencies in just about everything that you can create. And so one of the systems that I really appreciated learning about, or one of the tactics, was if you have to do something twice, you then need a system for it. You need to build that out. We'd actually get together during KPI meetings on a Monday. And as a team, when we were smaller, I'd be surprised if they weren't still doing it now. But being able to say, all right, what have we done a couple of times? What SOP do we need to build in real time right now as a team, so everybody has clarity about what's going to happen with this process?
That's good. Yeah, I read about a coach. I think he was a cycling coach in the knees for the UK, I think, some period when the UK was not doing well at all. Their cycling was trash. They had never won a single Tour de France, and it was absolute garbage. And this coach came in and was obsessive about the 1% improvements. So from top to bottom, they started doing like special physical therapy for muscle recovery. They painted the inside of all of their vans and office spaces white so that they could identify specks of dust that might impact the bike's performance. Like all these little granular things that improved the operation by 1%. And they were obsessive about the 1% rather than those big gains. And within 3 years, they ended up winning I think they won the Tour de France like a few years in a row. They won some, like the most medals of any cycling team at one of the Olympics or some crazy stats. Basically, the stats like exploded after a few years of these 1% improvements all over the place that they were looking for. And it was from being obsessive over the 1%ers rather than just looking for the 10%ers. I love that expression. I love that. If you can't find something that gives you a 10% improvement, look for the 10 things that'll give you a 1% improvement. That's so good.
Yeah, absolutely. That's funny that you mentioned that, because that's part of the same story that would like incentivized us and that we leaned into of like, oh, holy smokes. Yeah. This is another great way to look at solving these problems. And if you look at your business as a whole and you can't find a couple of things where you can make a 1% efficiency improvement, it's probably time to step away or take a long vacation and come back with some new ideas.
Yeah. Yeah. No, I love that. So you learned a lot of these lessons and now you're applying it to the second portfolio that you're building. What's your approach there and where are you with it?
Yeah, so I started doing the same thing, right? Like I'm not the smartest tool in the shed, but I'm really good at standing on other people's shoulders and calling myself tall. So not reinventing the wheel and just being able to take those lessons and try to apply them, where we are right now up in Duluth, Minnesota. One of the things that I've really loved is the hotel space. Being able to find assets that people are not excited about right now or doesn't have enough like marketing quite yet. So our first deal with me and two other individuals in a joint venture, we bought a small 9-unit boutique hotel that's right on Lake Superior. It's beautiful. The original owners, the last owners that had it owned it for 38 years. So there's a lot of like R&M and some CapEx that needed to be there. Their reservations were still like on these like small little cards. They would manually write everything. And so when we saw this, we're like, yeah, I think that we can get a direct booking site. I'm pretty sure we could get stuff on Airbnb. I think that we can probably manage cleaners more efficiently. And that gave us the confidence to say, okay, what else can we do with this now? This has been a good experience. So those same two partners, we got involved with our next hotel that we're probably 70% of the way renovating right now. And that one's a 22 unit. And again, going back to like, well, how do we get to a cash out refi? How do we provide value for, the guests that are coming in? So we're doing, just under $1 million renovation on that one, which isn't massive from like a national perspective, but for our local market is a really big and really cool project. And finding like, what's the niche? Right? Like what is the thing that will drive people to want to stay here? And we discovered that this property is directly on the Superior hiking trail. It's also on the Keene Trail. These are both provide access to like one of 6 like gold rated mountain bike trail systems in America. I had no idea. But as soon as we found that out, we're like, oh man, like, yeah, we're building this for outdoor enthusiasts. So we have a sauna that we're having custom built that's going to be put in, plus a cold plunge. We have like multiple fire pits. There's an 8-car garage on the property. And so as we're thinking about this, we're like, all right, well, we don't want bicycles in rooms. People surely don't want to like leave them on the back of their cars in the carriage holders. So what if we take a couple of these garage stalls and we build them where people can park their bikes indoors with their locks, with security cameras? What if we put giant gear lockers up? How about if we create tables with tools and we have air compressors where people can like tune up their bikes, do whatever they need to? A mountain biking enthusiast who's kind of locally famous around here sent me another group in Iowa that did this exact same thing, and they had a freaking bike wash. Like, right, you're out ripping around on the trail. I'm like, of course we need to do that. Like, that's such a great idea. Not only will it, keep our operating costs down from a staffing and a cleaning perspective, because now we don't have all this mud that's going to be coming in the rooms, but it's just another value add component for the guest experience. And then to kind of offset, because Duluth is a really seasonal regional destination for vacationers up in this area. The North Shore is just super beautiful. And we realized, man, we also are on like the head of the snowmobile trail. So now we can get snowmobilers up here. So what if we take these bays during the winter time, we move all the bike stuff to the back, and now we have indoor storage for snowmobilers to get in and work on their sleds when they break down. So just really trying to like identify a couple of things that are important to the demographic that's going to stay there and just like lean into it as hard as possible.
Dude, that's amazing. Knowing your customer or your ideal avatar is so big. It is everything. Because so that probably levels out your seasonality a lot too, right? Because in the winter, pretty much the only activity to do, unless you're near mountains, is going to be snowmobiling in that area, I guess, right?
Mm-hmm.
Yeah. So
there's cross-country skiing too. And we have like lots of like ice fishing is really, really big up here in the cold white north. We aren't on a lake, but that's like another great idea to lean into is like, what can the market support? Like, what are the activities? And then we're also like 7 minutes to a little local ski resort. It's nothing like you have out west. It's not a stow out east, but people still come up here for it because it's close, and it's only, a 2.5 hour drive from the biggest MSA in Minnesota. So that's been really fun to think about those things, and designing the space with the intentionality too. So we'll have like giant cubbies inside each of the rooms and like a drop zone for all the gear, and like you can put your bike helmets in these like massive oversized cubbies that we have. It's been sweet. It's been a lot of fun.
And is that hotel live right now?
Not yet. I actually just got set up our construction cleanup crew out there this morning. And once they're done next week, our designer and her partner with Winsome Homes are going to come out there, and they're going to go ahead and get everything set up for the beds and all of the, the rest of the FF&E, any like touch-up painting. We've actually got into some pretty groovy wallpaper too, which I'm excited about. Like the before and after is going to be gnarly, because it was, this place hasn't been updated since like 1985. And so seeing it glorify a little bit and see a totally different demographic come in is really fulfilling. And again, like going back to, earlier in the conversation, like it's great to make money, but if you can make money and there's purpose and you're serving a need and people feel like they're getting value out of being there, like that's just a win for the guest. It's a win for the investors and the ownership group. And then it's also a win for the community, because we are taking an ugly duckling on the block and breathing new life into it.
What's your long-term strategy or your long-term goal for scaling your portfolio?
So I was talking with a friend about this the other week, and I think there's a lot of mantra that I hear from individuals on podcasts where they're like, follow the passion, like pursue everything that you want to. And I've got enough passions, ADHD, I'm kind of all over the place. But I heard a phrase within like the last 6 months where it's like, skip your passion and lean into the opportunity that's presented to you. And so it's wild that, I've just asked on Facebook a couple of times. I flip single family homes too as like a cash generation model to keep the lights on in my own house as we're waiting for some of these larger refis. And people just send stuff to me if they know that you're asking about it. And then we had a commercial building that was a retail place, and someone had said, we don't have a restaurant over in our neighborhood anymore for breakfast. I'm like, that's an opportunity. That's a solution. Who do I know that needs to bring a restaurant over here? And so a restaurateur in our area who's done very well consulted with us. And he's like, let me put you in touch with this person. So I've got a planning review meeting with the city tomorrow to get our permit set to transform this what was an old driving school clinic for high schoolers into a restaurant space. And it will be the only one serving like 35,000 people on this side of town that's going to provide breakfast. And then because I made that same ask, right, the universe is delivering all of this when you speak aloud what you want. That old VFW building that you and I were chatting about before the call came up. And they kind of negotiated against themselves a little bit. We were able to get it at a discounted price. And one of the individuals said, I still want to earn some interest on this, but I don't want to make too much money because I'll get taxed. So can I hold a note for $150,000 at 3% interest? Like, yeah, absolutely you can. And then everything that we've seen doing is improving the community. Not only that, the follow-up question was, well, I tell you what, if it appraises for more, can we also use that, created equity to draw down as a construction loan? So like all these things are like never in a million years would I have thought like, I want to own a restaurant, and the first one we're just going to lease that to the restaurant owner. But this next one, like, yeah, we're going to own a restaurant. And we saw the build out cost. I'm deep diving a little bit, but we saw like the build out cost, and like a range hood on its own for a 6-foot hood is like $70,000 to install, right? So building a commercial kitchen is prohibitively expensive. It'd be like another $250,000. And so when we were chatting with a couple of individuals, you're like, well, what if you get a food truck instead? Right? Like, what if you get the bar up and running and then you just have like community seating on the inside of this building, and you create like this entrance of like food trucks that are out there, and you make this food truck court for individuals? It's like, well, shit, for $250,000, yeah, you can buy a couple of food trucks with that. Plus, then you have less regulation that you have to fight with the Department of Health. And now, rather than getting all the permitting from the state and also from the county inspections, it's a $150 per year license with the city to drop a food truck on land that you own.
Wow. Dude, that's incredible. And how did you find that deal?
I just asked to put it out on Facebook to friends. And it was the second time that I did that. And it was like inside of a week, too.
I just asked.
Yeah.
Dude, that's amazing.
It's crazy, right?
It is like crazy what happens if you just ask and put it out there. Like
100%.
Dude, I had somebody send me a deal. It looks like it could be a pretty solid deal. I'm still working out the kinks with them on it. But it was literally somebody that I had on my podcast who was in multifamily. And they messaged me, this was like a year ago, and we stayed in touch. And he messaged me a month ago and was like, hey, I bought a hotel. Turns out I hate hotels. I just want to stick with multifamily. Do you want it? And literally our like negotiating the terms was, I pulled up the underwriting model and I said, these are the numbers that I need to hit. And so we just played and adjusted the purchase price. If he did seller financing, this and that, and adjusted the terms and literally negotiated on the underwriting model. And I told him I need to hit at a minimum an 18% internal rate of return. So like, what can we do to get there? And we were literally negotiating in real time while turning these knobs. And I was like, dude, this is how every negotiation should go. I understand that, it's different because we're friends. And if you're dealing with somebody that you might not trust, then you have to figure out those things. Or if everyone's trying to get the most they can out of a deal, then it changes the game. But I was sitting there adjusting these knobs on the model and just thinking like, dude, this is so nice. And it's literally just like putting myself out there. Like you put yourself out there and said like, hey, I'm looking for something. Can I have it? And the universe is like, here you go.
There
like
it is.
Literally just telling the world
on a silver platter.
the world what you're doing and putting it out there and saying, yo, yeah, I buy hotels. This is what I'm looking for. I'm looking for this type of deal or that type of deal. People would be blown away if they realized how low the fruit actually is hanging. It is so incredibly low.
Absolutely. Yeah, that's exactly right.
Dude, that's exciting. Wait, so I know that this is still very fresh, but what does it look like in terms of the timeline for that one?
We want it to be super quick. So in our offer, right, in the purchase and sale agreement, we asked for a 90-day close. We have our diligence. But like I've been through this building so many times, I know that like we're not going to run into hiccups that we've discovered so far. We've already had mechanical contractors out there. So I actually have a family member who I approached because she and her husband have managed bars and restaurants out in Colorado for the last 15 years. Said, hey, look, this is the thing I'm doing. Are you interested in moving out here, relocate your family? And would you be the GM for it? And to make sure that incentives are aligned, right? Like we'll start at a salary for you. But because they had talked to me a bit, they're like, it feels like we're not getting ahead. And it's like, Yep, it's because you're not on the ownership side of it, or you're not a partner in a deal. So the way that we're going to structure this to make sure that like I can excuse myself from the project and stay an owner is if we hit certain revenue targets each year, they'll get a percentage of like a profit share. And rather than them realizing that profit, it'll go into a bucket. So when we get to our refi points, as long as they hit these metrics, then we're going to rewrite the operating agreement during the refi where they get an equity stake. It reduces the salary, so it's not, it still doesn't burden the operating costs. And then they are now an owner in this restaurant. So it helps incentivize, it keeps everybody on the same track to know that like, this is the goal that's here. So yeah, I'm to answer the question, to come full circle on that, June 1st is our date that we want to be up and running. And even if it's not perfect, it's like, all right, we're going to lead with revenue. We're going to throw spaghetti at the wall. We're going to see if it sticks. If it doesn't start sticking, we'll pivot. We'll do something a little different and just keep going from that point.
Dude, that's awesome. And then you'll iron out these kinks, and then we'll start a fund. And we'll blow the whole damn thing up.
I love it. Yeah, this location too, like no one's touched it, but it's right across the street from like an 86 unit campground and RV park that doesn't have food options. It's also at the same turn in for like I think it's the Lakeview National Golf Course. It's by the curling club. It's right behind the hockey arena. And then we have like at the edge of the property on a different parcel is a gas station as an anchor point. So it's like, man, it's hard to make up the things that when you ask for it, just even if you don't pull the trigger on something, but just getting good at evaluating these and being open and being able to say, yes, we can do this. Like, yes, it's hard. Yes, it's new. But, going back to the beginning of our conversation about you just need to find the right people, get them in the right seats and make sure that you have the buy-in and things are going to turn out just fine.
Yeah. So let's give listeners something tactical. So when you said you asked, what was that? Was that like just a post on your personal Facebook page? What did the post look like? Like if somebody said, I want to do that exact thing, how would you guide them on it?
Dude, all you have to do is grab this thing right here and record a video of yourself, get it on your Insta, get it on Facebook and say, hey, I'm looking for another opportunity, and then define what that is. So the first one I said, I'm looking for another flip. And by the end of the day, I had an agent who's a buddy of mine who's like, hey, I've got a property that I think they would take less on. Do you want to go look at it? It's like, absolutely. And then I don't even know if I made a second video, to be honest. I think when I was at a hockey practice, one of the moms said, hey, I saw this. My dad owns this property just up the shore in another city. I can put you in touch with him if you're interested. And yeah, it was simple. Like it was a 30-second, I'm just looking for something, who can help me out? And then you get all these reactions. Then I had a business broker that reached out to me as well. And was like, I have a bunch of stuff. Are you interested in looking at this? So it's amazing the power of like the network. Like don't underestimate your friends, family, and people that are in the ecosystem. If you have a specific ask, just make the ask. Worst case scenario, it's crickets and you lost 30 seconds of your time and that's it.
Yeah. I tell people all the time, I started posting on social about buying hotels and what I was doing. And when we raised capital for this last deal, there was an investor that I spoke to, somebody that I worked with a decade ago, hadn't spoken to him since. And we were cordial. We weren't even like super close, but we were cordial friends. We grabbed drinks a couple times. And a decade later, I hopped on a call with him and I was telling him about what we were doing. And like 2 minutes in, he said, oh, no, dude, I get what you're doing. I've been following you on social. I'm down to invest. And ended up investing 50 grand. And I was like, dude, that was like the best return on 5 minutes I've ever had in my entire life. Literally just from putting it out there and telling people what I'm doing and then letting them join along for the journey and contributing because people want to be part of something cool. So you tell them the cool thing that you're doing and they want to somehow, like we're herd animals. Like we thrive off the community. So if you tell the world what you're doing, the world's going to help you get there.
Absolutely. It's cool. And I met with a couple of different investors that I'm trying to secure master promissory notes from as well, just because these deals look so enticing that I can try to keep the lion's share if we just, have the debt well structured. And one of them brought up this idea. Is like, I can take, a lower, like 8% return on something over a couple of years. But what if we make it a little bit more interesting to me and we align it with your needs that there's a bonus interest payment at the time of the refi? I'm like, okay, this just opened up a whole different world of interesting opportunities too. So being intentional about listening to the feedback of what your investors want to and finding a way to meet that need. Like you said, it can be a negotiation. If you can do it in real time, it's even better, as long as you hit the numbers on the spreadsheet that you need to see. And they also have, a really, a quality exit, and they feel like I'm being taken care of, that the capital pool just opens up so much easier for you too, because then they want to tell their friends and family about it. And it just makes it, I don't know, it's a really privileged position to be in. And it's extremely gratifying too, that some days when you're like, oh man, that anxiety, right? That dark cloud creeps in. You're like, am I doing the right thing? And each time somebody new shows up in front of me, it's reaffirming and validating. It says, yes, I am doing the right thing. There is trust that is here. Let's keep going until something else happens and we need to make a pivot.
Yeah, 100%. Reilly, this has been a blast. We always wrap up with asking this question. I believe that the questions are the answer. So what do you feel somebody needs to ask themselves or others to be successful in your space?
I would say it would probably be a negative question first. What are the things that I'm not good at? Second to that, what are the things that I don't want to do? And when you can start aligning and identifying like 60% of what I need is just something I'm uncomfortable with, then I think the third question would be, okay, who can I reach out to that can help fill that gap for me so we have a whole pie?
Yeah. Yeah, I always say I would rather get a really big pie and cut it up to bring rock stars on rather than own 100% of a small pie that I have to do everything myself.
Right.
I'd much rather bring the rock stars on. No, I love that. Who, not how, all the way. Reilly, where can people find you?
You're able to reach out to me. I'd say Facebook is probably the simplest way to get in. I have a very long and complicated email right now. It's Reilly@theinnongitchigumi.com for a hotel. We'll change that shortly to make it simpler. Yeah, I would say that's probably the best way there. I'm also the Brennan Buzz on Instagram if anybody's interested in seeing some of the fun, quirky videos we throw up from time to time showing what we're doing as a showcase.
Hell yeah. Reilly, it's been a blast. We'll stay in touch. We'll start a fund one day with medical professionals, raise $100 million and buy entire towns. I'm super stoked about it.
Love it.
And yeah, man, thanks for being on.
Yeah, grateful to be here. Thanks, Gideon. Take it easy. We'll catch you later, brother.
Cheers.